In this video, I'm going to show you how I found this trade on GBPUSD. When you finish this video, head over to the link in the description and join my free trading course. That's going to help open your eyes to a new perspective of the market. Hello everyone and welcome back to the channel. In today's video, I'm going to take you into the mind of a day trader and break down this position that I took on GBPUSD. This was a position I took yesterday at the time of making this video. It was a 3.7R position and it was a very simple systematic approach to the trade. So the way that I trade is actually formulate the ideas on a kind of higher time frame. And when I have an idea overall, I'll then go down to the low time frames to find executions, find valid positions, and execute. I think a big problem people have when they're day trading is they don't go high enough. They don't look at the bigger picture, and then they are stuck in those small 1 and 5 minute candles trying to work out what the next one's going to do. There is a lot of noise down there, and although you can find some really good setups, you do need to have a bit of an understanding of what the higher time frame picture is saying. So let's quickly look at how I formulate my trades and how I found this trade idea. So the real area that we want to focus on and the area that I look at is actually this here. But it's also important to know what is going on a higher time frame perspective. And if we do just quickly have a look on the 4 hour, you will see that the market is now trading for the third time into this big 4 hour supply zone. So the supply zone was retested lightly, then retested fully, and then we actually came in and formed around an equal high, a slightly lower high just here. After that, we had obviously this substructure point broken, being this one here. So this gives me the idea that, okay, for an intraday trade, potentially I would want to see, some of this higher area filled to then actually bring a sell-off. So moving back down to the 30-minute, that's pretty much all we need to know from that high time frame picture. We can clean the chart up a bit, and then we can actually start to look at this current structure here. So we can see here that, well, we had the idea that potentially we could pull in up here if there was any imbalance. And as we can see, there is actually an imbalanced 30-minute supply zone. So this supply zone becomes an area of interest for me to sell from because it is an imbalanced supply. And we obviously just saw that the higher time frame picture is kind of telling us that we may want to sell. Now, the reason I wouldn't sell straight away is because if we start to break down this structure here, we can see we've got lower lows and lower highs coming into this point before we break out to the upside. Now here we formed our first higher high in this kind of 30-minute trend. And then we had this consolidation area where we formed this higher high, higher low, and then another higher low, and then we broke out of that range to the upside. So what we can see from here is that, okay, we do have an overall short idea, but we could potentially look for this area to be filled because we can now see we've broken through some of these structure points and kind of opened the way to that imbalance there. So if we want to sell from here, what can we do? Well, we can look at potential ways to buy into that because we know if we obviously want to sell from there, we are expecting the market to move into that. And this 30-minute trend here is actually bullish. So there's no reason really to actually start selling heavily into this until obviously we fill that imbalance. So what I would next do is mark out this demand and consider, right, if I'm going to sell from up there, we do have open imbalance. So potentially if we get the confirmation to do so, I'll look for a buy once we hit this area here. So this was my overall idea for the trade, possibly buying from this point to sell down from this point. Now you can see I'm basically building ideas both ways, right? I'm looking for, well, if we're going to move into here, how can we actually profit on the way into that? Now, once again, bringing that same factor in again, I can see that if we are going to buy from here, or we want to look for buys from here, we have an imbalance and we could look to fill that imbalance from where we currently are to actually get that buy in. So this is where the low time frame trade forms. Because from this point, I now know that, well, with this imbalance below and with that demand zone target, I could potentially look for a short if the trend tells me that that's a good thing to do, just to bring price through this imbalance and trade into this demand zone here. So this is where the real intraday trading begins, and we're down on the 5 and 1 minute time frames to identify any shifts in the trend from where we currently are. Now we can see in this current leg of movement, we had the breakout, we had a higher high, we had a higher low, then we've had a higher high. So now what we'll be doing is looking for a break of this to actually confirm the downside. Now we can see here that the break did come through and we did have this bearish break of structure. So now looking on the 1 minute time frame, what can we see? Well, we can see that the market has broken down successfully and it is essentially starting to prove to us that the market may be ready to move down. Now, I actually didn't sell from this point. Sometimes I want better confirmation. And if we consider the high time frame picture, that 30-minute we just looked at, we can see that this is actually a higher high in the 30-minute trend. So for me, selling straight into this after one initial breakdown on the 1 and 5 minute time frames is a little bit risky, So it's not something that I would generally do in a trade like this, and it's not something that I did in this example either. But you can see that it would have actually worked very, very nicely and brought us a very good sell-off straight away from that first supply point. Now, the setup that I actually went for myself came after this, because what we've seen now is the high point, a lower low, a lower high, and a new lower low. So we can clearly see now that we are downtrending, and we can clearly see the imbalance is still open and not filled. For this, I just stayed with the 10-minute demand zone because I obviously was looking for buys from here, so I didn't want to try and sell too far into the range. But now we have this 1-minute picture, and what does this show us? A clearly defined downtrend that could bring us through this imbalance to trade into this demand zone here. So what I now do is look for high interest selling points, and I saw this area here as the last indecision candle before the sell-off really happened. So for me, this was a nice area to sell from. Basically, what this shows me is this is where the selling pressure was sitting in this consolidation before we sold off. So from this point, I actually opted to put an order at the low of the zone. I put my stop loss over the high to account for, if the market did push into this area. And then my target was just into that demand zone there. So my trade overall was 3.7R, as you can see here. And this was the exact position that I executed myself, following exactly what I've just showed you. Now, when we allow the market to play out, you'll see after a little bit of consolidation, we did come and push into that zone. And as soon as we hit that point, we had a very dramatic sell-off. This is because, as mentioned, there was a lot of selling pressure sitting at this price point to come and fill through this imbalance and trade into demand. And that was how I secured the trade. So stepping into my mind a little bit there, you saw how I formulate the idea on a higher time frame and generally find areas that I'm looking to buy to or from or sell to or from. The 30-minute gave me the idea to potentially buy from this zone to then take up and sell from this zone. But what that means is if there's imbalance here into this zone, I can then scale in further and then use the low time frames to actually formulate a trade idea to bring down towards those areas that I'm looking to buy or sell from. So it's a very simple process where I'm basically identifying where the market is likely to go next, and then I work with confirmations on the low time frames to actually secure trades and get executions to trade through those movements. Now, as we will see, there was no confirmation given in this area, and then the market did heavily sell off. I think there's a few insightful tips here for you to make sure you're not going onto too low of a time frame straight away. Starting over here, you're obviously going to see a lot of noise. It can be difficult to work out what's going to happen. Whereas if you do start on the 30-minute, for example, or the 1 hour or the 4 hour and identify the larger picture, you can clearly understand where the market's likely to go to and from next. And what that can do is find you these kind of opportunities within that intraday structure. So that was 3.7R done within 15 minutes, and it was a very quick and stress-free trade. You can see how I identified the areas to buy and sell from. You saw how I identified my stop loss positioning and how I identified my target and how I actually executed and managed that position to success. So I hope this video has been beneficial, and I hope you've taken a few valuable tips from it. If you have, please do drop a like. That will help my channel to grow. And if you do want to learn all of the systems that I use step by step with my personal support, then head over to the link in the description and join the academy. Thanks so much for watching. I hope you've enjoyed this, and I'll see you in the next video.